Welcome to the Unconventional Investor Podcast. I'm your host, Michelle Moses, certified financial planner, licensed realtor, and founder of Me Financial. If you're an accredited investor feeling overwhelmed by managing your portfolio and looking for alternative investment strategies that go beyond the traditional stock market, you're in the right place. Let's head into today's episode so you can start taking control of your financial future.
Hello, everyone, and thank you for joining me. Today, we are going to be talking about what it is logistically like to invest in alternative investments. I get a lot of people that come to me, obviously, because they want to add alternatives to their portfolio, and they go into two different camps. And so I'm going to kind of go over the two different camps and how it usually goes, because people are confused on how to actually invest. You know, they're like, I want to do something like this, but I'm not sure how to do it, because we are so used to hearing from the media, right? Or, you know, I shouldn't even just say the media, but whatever, online, about you are doing stocks and bonds and this is your brokerage account. You know, that is so drilled into us that we know all of that. And so when I start to talk about alternative investments, or they see my page or something that I've said, then they're like, oh, well, how does that actually happen? And that's what I want to talk about today, is the logistics of how it actually happens, and the thought process of things, and maybe the time frame too. So I think the largest group of people that come to me that want alts are the people that have everything in the stock market. Their 401k, they've got a brokerage account. You know, they even have their HSA is in the stock market, and it's just a lot for them. They would like to diversify, but they're working so much that, you know, getting an Airbnb or having another, you know, it's just a lot of work to diversify into real estate in that way. And I think traditionally over the last 10 or 15 years, that was kind of drilled into us of get a rental, get a, you know, rich dad, poor dad type of thing. That used to be the thing. And now it's, well, real estate is really high, and managing Airbnb is a lot, and I'm not really interested in doing that. I would like something to be making money that is outside of the stocks and bonds, because people, they get really stressed and it's like kind of out of their control, right? It's like, I have all my eggs in this one basket besides my house, or besides this other little investment that I have. I would like to diversify into something else. And so that is usually when they come to me and they aren't even sure what's out there. And to just say the logistics of it, it's mostly just an education time frame. Sometimes they've listened to the podcast and they say, hey, I really like that investment, I want to do that one. Or I like that one, but let's talk about some of the other ones. And they might have some tax, I should say, desires to save taxes. And if that is the case, then there are certain funds that we could put them in for that sort of strategy. And a lot of times it does take months, because they are, you know, we're going through their finances and making sure that they're a good candidate for it and that they can handle it, because these funds are a minimum of 3 years usually. Usually they're 5 to 7 years. I mean, they're a long time frame. So if you're 73 years old, usually that's not a time frame that people want. They're like, no, that's too long. I don't want something that long. But you know, you're in your 40s, your 50s, even your 30s, and you want to get into alternatives and that time frame fits, then great. So usually what we do is, you know, we go through everything and we see what fits about mostly. Do you want income? Do you want something for long-term growth? And honestly, most of the time, it's just mostly what people are most interested in. And what I tell them is, we're going to talk about these couple ones, and then you tell me. Sometimes they can tell me right away, I'm so excited about that one. That's the one I'm most interested in. We're going to do that one. Sometimes they need to go sleep on it. And I just say, tell me the one you can't stop thinking about. That is probably the one that we need to be doing. And I say that about a lot of things, by the way, guys. So if there's anything with your finances, if you can't stop thinking about it, it's usually the right way to go. And so what we do is we'll go into, and so, sorry, I'm getting ahead of myself here. We will transfer off and we'll split up their account. So if it's an IRA, we have to go into what's called a self-directed account. And so we will transfer out the certain amount that we're going to put into the alternative investment into that self-directed account. So it's opening a new account. Yes, having a new login. I know, you know, we all have so many logins, but yes, it's having another login. And it is then doing the paperwork to actually subscribe to this alternative investment. And I think people ask, well, can't I just do this alternative, in my Fidelity or in my Schwab account? And you absolutely can. It's just that if you go to a self-directed custodian themselves, it's usually cheaper. When you are at Fidelity or Schwab, it's like $250 to $300 a year to have these in your account. And if you get 4 or 5 of these going, you're at $1,200 a year just in fees, just to have it there. And it really erodes your rate of return. If you've got one, maybe it's not worth it and you don't want the login. I totally understand that. But most of the time we're transferring over to a self-directed IRA, and we are transferring the money over there. And then essentially what you do is you tell the self-directed IRA place, you say, hey, I want to invest in XYZ Corp. Here is the paperwork for me to subscribe to XYZ Corp. And I am instructing you to send this $100,000 that's in my IRA to them. And you're going to send them that money, and then in your self-directed account, it's going to book as you are invested in XYZ Corp with so many shares, and it's worth $100,000 or whatever it happens to be. That is essentially how it works. I think that it is easier to do. It's actually harder for people to understand because people are so used to having stocks go up and down, and you can log into your Schwab account and you can see like what your rate of return is. Whereas having the self-directed account, it is just there to keep track of it because it's an IRA. Now, if you have cash, so let's pretend that you didn't want to invest in an IRA, but you just had a brokerage account with some cash in it, or you had a savings account with cash. You technically don't need to have the self-directed account to hold it. You could send the money directly to the company and then invest that way. And then the company would be sending you statements, and they would be sending you newsletters and things about whatever your return is. You do not need a custodian, a self-directed custodian, to keep track of what your basis is and, what your dividends are and all of that. You will get all of your paperwork directly from the company. So that's kind of the difference between the two. The only reason some people, because they're working with an advisor, they'll go into the self-directed account with cash so that they can pay my fee over time, just like 1% a year, instead of paying like a big fee up front. And so they'll choose to have the account that way. And I know it's another login, but then they have me, to ask questions to and do things like that. So that's kind of, I would say the timeline for that is usually, it can be fast. It could be 3 or 4 months depending on the person, but sometimes it's just a couple months by the time we go through their accounts and then decide, okay, this would be the best one to use for this particular investment. It's really just going through and deciding what you're most interested in. And then, what account hasn't been doing that much, or it's just been sitting there since, you left that particular job and you want to do something with it. Everybody has their reason. But, going through and deciding all of that sometimes takes some time. The other category of person that comes to me that wants to invest in alts is usually someone that is more sophisticated. They have alts already, or they've done like some metals that they've invested in. They already have done like a self-directed account just to do some real estate. Obviously, I guess I'm just saying they have more experience with just investing outside of the stock market. And they'll come to me and just say, I want to do this particular tax strategy. I need an 80% write-off. I need, I need to do a 1031 exchange because I have this house that I want to, I don't want to buy another house. I would rather just go into an investment. They know exactly kind of what they need to do. And so then I essentially just present to them the different funds that will do those things that I like. I did another episode where it was my litmus tests, and I'll put that in the show notes of what episode and the number and all that. But I did a litmus test one, and so at the ones that satisfied my litmus test, I will then give them the ones that fit the particular need that they have. So if they're rolling over the real estate, there might be only 2 or 3 that they like. Or, there could be a ton in multifamily, but I'll be like, no, I like this one because of this, because it's, a big manager, it's a medium manager. So everybody is different. It just depends on what their needs are, but that track can go super fast, like 2 weeks. That someone comes to me, they say, this is what I need. I have, $100,000 that this is what I want to do. And then we just do the alternative investment and they're, on their way. And it can be the same thing. If it's in an IRA, then it needs to be at the self-directed. And if it's cash, then they can invest directly with the company. And then they don't need me anymore. Technically my name would still be on the investment as the advisor that sold it to them. And I would still have access to see what the value is and what the returns are. But I wouldn't be necessarily, how do I put this? I wouldn't necessarily be on the account like at a custodian, like a Schwab or at your self-directed IRA place. It would just be at the sponsor, what's called the sponsor level at the alternative investment. So that's kind of the logistics of how it works. Because I think a lot of people are just wondering, like, how do I do this? And really, it's just different paperwork. If you're using cash, you're filling out the paperwork for the fund. And a lot of times these subscription agreements are like 8 pages. They're not that long. And so you are giving them all of your information. You're sending your cash in some way, shape, or form. You can send a check or a wire, and then you're invested and you get your reports back. You get your log-on information, and then you'll probably get signed up for their newsletters and whatever their updates are. If it is within an IRA, it's a little bit more complicated because we are opening up the account, we're transferring the money from your custodian, and then we are having to set up some sort of fee schedule with me to manage it. And then we're sending the paperwork over to the company to invest the money. So it is just a little bit different. And I think it's just important to know the difference between the cash, the IRA, and then if you're just more sophisticated or if it's going to just take some time. And, I do get some people that are, just in the stock market. They want to do alternatives. They're not an accredited investor, but they would like to get there, or they want to do something else. And so I can work with those people because there is something called Reg A+, which is just a $10,000 investment. They're just not as popular. They're not as popular in the marketplace, and it's harder to find them because it is so much more expensive to get registered as a Reg A+. I'm hoping that they fix that in the future, but there's not a lot of people that are doing that right now. So anyway, I hope you found this helpful because I do, it sounds simple. And if you've done it before, you're like, why are you even doing an episode on this? But these are the questions that I get because people are wondering, how do I actually get a hold of these things? Like this is this whole world that's out there that I don't even know about. And you don't know about it because it's only for accredited investors. And it is kind of behind a wall. If you were to go to a website, you have to certify that you're an accredited investor before being able to see some of the deals. But then also, like, what are you even looking at? Because there's so many. It's not like, it's like looking at this huge line of ETFs and mutual funds, and you have no idea who's good, who's not. But in this world of alternative investments, anybody with money and that can get a lawyer, they could put together a deal. They can get the paperwork and they could technically be legal in order to go raise money in order to go on their project. And so you want to make sure it's not like anybody is looking at them and going, yeah, you're illegal and you're not able to do this. That's why you have those third-party due diligence reports that a lawyer does to look at so that you know that they're legit. So it's like you get into this world, you get past the world of being an accredited investor. And then there's this whole other world that you have to look at their fees and, are they a good manager or not? What's their history? And it's a whole nother learning curve in that. And so hopefully you find someone like me to help you go through all of them because it is a confusing world. But I find it very exciting. I think people love alternatives. My clients love them because it doesn't put all their eggs in one basket. It helps them sleep at night. They love to not just be at the whim of something that is not in their control. And it's not that the alternatives are in their control, but like you split it up, that something is going to hit. So if you've got some metals, and then you also have an alternative, and then you have a house, and then you have, your 401k and maybe something else. You're like diversifying, right? It makes you feel better. And then it's one thing goes down, the other thing might not go down. And it just helps you sleep better at night. And so I'm really trying to bring these to you so that there's a whole nother world, because I get on Reddit and I'm on the Henry, the high earners not rich yet. And people are like, well, I have this extra money. What should I do? And the advice is always go open another brokerage account. And I'm like, man, that sounds freaking boring as all get out. Like, unless you love watching the stock market, like I do not want to have anything but my 401k in the stock market unless it is short-term cash, because I find these so exciting. And I would never just want to have another brokerage account, because I've already done that. Like, I'm already doing that and I can have that exposure in one account. So why would I have this in this other account? That's my rationale for myself. So anyway, let me know if you have any questions. I do have a quiz on my website that is about how alternatives can fit into your portfolio. You can also book a 15-minute call with me just to discuss your situation if you want. It's free. Again, that's on my website at mefinancial.net. And thank you so much for listening. I appreciate your time, and I hope you got something from this.
Thank you for listening to the Unconventional Investor Podcast. I hope you feel more confident in how you can grow your wealth using the strategies I shared in this episode. If you're ready to take the next step in diversifying your portfolio outside the stock market with alternative investments, head to mefinancial.net/contact us to book a 15-minute consult call with me. Let's discuss how we can work together to achieve your financial goals. Until then, I'll see you on the next episode.